listen to the data. This was a key point of your video, how to master the mindset of crypto and investing. If you missed that, it's probably, some people say it's the most important video I've ever made. I'll add it here afterwards. But I find that it's easy when I'm home and focused on TA, but in social situations, I find myself failing to capture falling capture to the group think, i.e. bad psychology of trading you warn about. How do you stay steadfast, focused, data-driven, and confident when hearing opposing views with great passion and conviction, especially from your friends and family with stubborn beliefs, and stave off emotion and fear? This is probably the best question I've ever had. Thank you so much for asking it. I think if I had spent my life listening to others, I would be both broke and dead. Okay? A simple fact. And I learned that in my 20s, not kind of, we're still far from perfect, but literally to kind of blaze my own trail. If you listen to groupthink and consensus, mathematically you'll always be behind. That's why I'm not a big believer in things like sentiment. Because if everybody's talking about the same thing, you're already too late. So that's kind of my take. So first of all, you did mention TA. You look at TA first. And investing solely, I'll repeat this again, I've shared this once before, investing solely based on technical analysis is not recommended because it considers past price and volume data, but it does not account for fundamental factors such as financial health, market position, industry trades, whale movements, etc. TA can identify short-term trends and trading opportunities, but it may not provide a complete picture of the token or a company's long-term prospects. And relying solely on technical analysis can also lead to overtrading and failure to identify important market events or sentiment shifts. That is so important. Combining technical and fundamental analysis is, however, the secret sauce, and that is what I do. So use FA to decide what and TA to decide when. It's that simple, okay? But never, ever, ever rely on TA alone. You need to always keep your head out the window, find out what's going on in the world. Please remember that. Let's talk about how you blaze your own trail and how I do it. First of all, conduct your own research. Rather than relying solely on the opinions of others, it's important to conduct your own research. I always say, if you are investing something, research it like you're going to marry it. Okay, do your due diligence, do your background research, etc., and build an analysis independent of others. This can help you avoid being swayed by the opinions of others and help you make more informed decisions. Classic example of that. If we're back in October, November 2022, if you'd listened to the sentiment on Twitter and listened to others, you'd still be sitting on cash. And that's just the reality. So again, do your own research. Build data-driven models, absolutely critical as well. Get comfortable with modeling, get comfortable with planning, get comfortable with setting goals, absolutely critical. Don't listen to anybody unless you're very, very, very smart. I have a very narrow list of people that I listen to and trust, but most of my own information comes from me. And also seek diverse sources of information. This means diversify all the information you get from everywhere. Even listen to people that are, say, for example, bears. Listen to their theses, just in case they actually have something that could spark a new idea. And it's important to seek out these diverse sources of information and opinions rather than relying solely on a single source or a group of individuals that might be, say, bullish, for example. And this can help you gain a broader perspective and avoid, again, being influenced by narrow viewpoints. Also, challenge assumptions all the time and consensus views. Don't be afraid to challenge assumptions. Critical thinking, first principles thinking, and questioning can help you identify potential flaws or biases in the prevailing wisdom. And then stay disciplined, avoid emotional reactions, leave your emotions at the door when investing and researching. This can be a major driver of groupthink behavior. Sticking to a well-defined trading plan and avoiding impulsive decisions can help you stay disciplined. And finally, keep learning. Never stop educating yourself. Never stop. Be like a shark. As soon as the shark stops swimming, boom, game over. Think of swimming as learning. And always develop a deeper understanding of the markets and make sure you make those informed decisions. And that is basically it. It sounds like a small list, but literally build your own frame of mind. Get deep. That's one of the reasons I look at so few assets, because I look at so much. Now, one of the reasons I look at so much macro is because that determines where things are going. And we'll talk more about that in a minute too. So hope that helped. Actually, one example I did include here as an example of groupthink. So if you fire up YouTube and you look at all the thumbnails, if you look, say, stock market or crypto, you'll see all the thumbnails with flames. The world is going to end. It's Armageddon, etc. S&P 500 going into recession. Consensus views say we're all going to die. But no, they were way too grim and they had too much of a recession factored in. And many of them were wrong. People thought Q1 results 2023 would be terrible. And folks still don't get what I've been stressing, banging my head on the table for months and months now, is higher inflation raises revenue and earnings. And this is what you see here. So this chart is black is the companies that beat. 77% of all companies beat earnings expectations. Okay. The pink is those that missed, about 20%, and about 2 or 3% met expectations. But the point is, the easy way to look at this carefully, I added a red line and a green line. One is obviously the trend was down up to Q3. Q4, it turned around, and Q1 was way better than expectations. I think there was a Bank of America strategist as well, Savita Subramanian, if I got that right, are considering whether their 2023 EPS target of $200 on average per share for the S&P 500 is far too low, given the strength of the results in Q1. They're thinking of adding another 10% to that to take it up to $220 a share. And again, be ahead of the curve. When, like, you look at the people on CNBS and all these other finance channels, they all have this group thing. They all think the world's going to die. I've never seen such a negative sentiment in my life. But again, maybe it's just they pump fear because fear sells. Maybe if I have a flame in a thumbnail, I actually thought about it for 2 years now, adding a flame to a thumbnail and having my mouth open and seeing if views would increase. But I'm not going to stoop that low ever. But anyway, that's just my take. So great question. Do your own research, blaze your own trail. Don't listen to others. And if you do, make sure they're very smart, very experienced, and are right most of the time.